Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 26th of April, 2022. A quick sound check, please. Let's make sure you can hear me well. This is episode number 2220. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Our convergent trading pre-market summary sheet this morning shows that the overall posture is really neutral. We see that that U.S. indices are slightly pulling back, but overall, in the grand scheme of things, we really haven't done much in the overnight session. We had a bit of a rebound rally yesterday, which was definitely in the cards, and we pulled back in the overnight session. The main items in play, as discussed before, the main item in play was the China shutdowns overnight. Basically, China shut down a city yesterday that had about 2.8 million people because they had 4 cases of COVID-19. This is what their zero tolerance policy is, and given that as long as they do that, then productivity is going to be poor as people sit at home, and this exacerbates the supply issue since China is the global supplier of manufactured goods, and we have basically a country that, despite the fact that its central bank is talking about stimulus, the policy on COVID is really very draconian, very hawkish. So keep an ear out for that. It's not being discussed very much in the mainstream media, but it's an important piece. Also, Russia looks like it is expanding its war into Moldova. Trying to cut off Ukraine. This is a significant development here. There was an attack, what's being called a terrorist attack on Moldova, and there's some indications from the Russian military that they're looking to encircle Ukraine. So it's just an ugly situation there. Germany just came out and said that they have now cut back the dependence on Russian oil to about 12%, and they expect to be 100% free of Russian oil demand, much shorter than the timeline they had already indicated before, which was a couple of years. So they're getting there very quickly to cut off a supply of funds there. The other piece for today is, of course, the very, very heavy earnings calendar today and for the rest of the week. Just as a reminder, as I said yesterday, about a third of the key stocks in the S&P 500 report this week. So keep an eye on earnings. This morning we had Centene, Valero, UPS, General Electric, PepsiCo, 3M, Banco Santander, and many others. Too many to name. After the close, we get Alphabet. We get Microsoft. Those are major stocks. We get General Motors, Mondelez, and Visa. So after the close, expecting the market to continue to rock. In terms of what's on the calendar, we did have some key figures come out today. U.S. durable goods came out for March. Came in at 0.8% versus 1.1% expected. Durable goods ex transports month on month came in at 1.1% versus 0.6% expected. So the durable goods ex transports came out pretty good. Durable goods and on aggregate came out pretty poor. You can almost inverse those to be in line. We just had the S&P Case-Shiller for February, a very old number, pretty stale number. Came in at 20.2% versus 19.3%. This is the year-on-year price increase based on Case-Shiller, 20.2% values of homes going up year on year for February. Just absolutely insane. And then we get new home sales at 10 a.m. Eastern today, expecting 0.77 million units. We get consumer confidence also at 10 a.m., expecting 106. And then after the close, API crude oil stock change, and that's what's on deck. Oil has dropped, did drop down yesterday below the 100 mark, and it's flirting with 100 this morning. Oil has a high of 119 cents, a low of $97.06, currently trading at 99.75. It's trading on the upper end of the range here. Oil continues to have a problem with production. A lot of companies that had been producers got blown out in 2014, again in 2017, and then again in 2020. So the U.S. is actually a massive producer of oil, but its oil production right now is much, much and far, far worse than it has ever been. So it's kind of interesting because it's the supply issue is a big problem, and that's keeping oil at these prices. If you look at the oil curve or the forward expirations of oil, you'll find that as you move forward, oil is actually considerably cheaper. Oil is in deep backwardation right now. If you're trading energies, it's important to kind of step back and look at future expirations. To look at what the smart money, the producers, the hedgers, speculators are expecting in terms of oil. Very, very interesting times in terms of trading and what the macro economy is doing. Very, very interesting. Bonds and notes are up. The S&P has traded 188,000, which is much, much less than what we saw yesterday. Yesterday, we were at 306 at this point. 59% of the inventory short, 59% of the volume that has traded in the overnight session occurred below the 42.93 settlement price. 37 points of range, point of control at 4,300, way above in what has got to be one of the ugliest profiles I've seen in a while in the overnight session. We'll look at that in a minute. I want to bring your attention to these numbers right here. Right here, okay? The rotations have expanded given the way things have been moving over the last week. Rotations on the S&P went up from the normal rotation on the S&P went up from 7 points to 7.5, 32 to 34 in the NQ, 4.0 to 4.3 in RTY, 44 points to 48 points in YM, and 38 cents to 40 cents in crude. This is your harmonic rotation based on a 1 minute chart. 1 minute chart swings over the last 10 RTH or main session numbers. Okay, very important statistic there. Keep an eye on this gray area every week. It's updated once a week. Let's take a look at yesterday. Yesterday, I talked about the expectation that we might open up and chop. Here it is. The expectation that we might open up and chop yesterday. If you recall, I felt very quizzy yesterday, so I asked a lot of quiz type questions, and I quizzed you on the fact that the market was trading right against the overnight point of control, right against VWAP in the overnight session. And that it was opening in that area. You could see that we opened at 42.44, point of control 42.35 yesterday, in yesterday's overnight session. So we had what was expected, which is a very kind of whippy morning. We opened and we sold off right away. The opening print was 42.44, and the opening swing high was one tick above that. So we had a bit of a drive that just reversed and went right back up, and we pushed both sides. We went neutral on the day. We pushed the initial balance. We had a gap down, right? We had a gap between the open and the prior close. That's called an external gap or a gap zone. Use the words that you like. And we went neutral on the day with a lot of trading consolidated in the middle and what is a pretty funky profile. There's a lot of balance here in the middle. And then we ran away into the close with a pretty decent high volume node right at the close. Again, I'm not going to quiz you again, but we're seeing this, right? We're seeing the market closing on extremes. We saw it do that on Thursday. We saw it do it on Friday. And now we're seeing it in reverse on Monday with a close right up on the extreme, but the point of control did not shift to the high. Now, if you recall from yesterday's video, I explained that setup and what potential it has. But since the auction was interrupted on the close, we had this very poor high. We reopened and we poked through that high, so we carried the trade into 43.0350. We broke through the 4,300 yesterday that we left behind yesterday. It was right there, right on the close. I could see it trying really hard to get to that 4,300. It could not, but we ended up pushing. And as soon as we tested, there was a lot of volume that went off right at 4,300 and 4,375, which is where the point of control is. Very sharp point of control and a really, really fugly profile. This profile is really ugly looking. Just very sharp point of control with a pretty jagged and what looks like a balanced bottom. So it's a kind of a boxy profile. So I called it balanced, but really it's a nondescript kind of messy type of profile in the overnight session. This did not reset. Let's reset it. Let's force reset it. So that's what we have. We are reverting a little bit back towards yesterday's bulkiness, which was where it was right in that 42.50 area, the mid-century figure. A lot of volume went off there, a lot of option plays there. And we're likely to make our way back into this high volume area. We did close the gap, but this really got accepted yesterday as balance. So we ran away from balance on the close in the afternoon. Could not trade that close to save my life, really. There was one trade that pulled back to the IB high. Pull that back in. Pulled back to the IB high, 42.46 right here. This was a decent structured trade. We could see that there was a fair amount of support underneath, but I wasn't paying attention and did not catch that trade. Yesterday did present some interesting plays, though, on pullbacks. So I highlighted a couple of those in the Head Trader channel at Convergent Trading. I showed how, we see one. I'll show you one right here against mid right there. We poke through. We bounce, break through. This is an impulse down. Then we come back from the other side, and then we have our continuation trade. We see it doing it right here at the same mid right here. Poke, 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 push through, come back, poke through. This one took about 2.5 points of heat for a push continuation. So we saw a lot of that. A lot of that kind of action yesterday where it's just kind of snaking around itself, with Delta yesterday rising through the entire session. Excuse me, let me clear my throat. With Delta rising throughout the session, it seemed like the aggressors were lifting. But to be honest with you, Delta can be very deceptive here. Be careful reading Delta as if it's price. It's not price, because you can have a rising Delta on huge selling icebergs. So actually supply there is heavy. Sellers are heavy, yet the Delta is rising as it's lifting, and the icebergs are reloading. You'll see Delta lifting with price not moving. So it's tricky to, Delta acts more as a confirmation of the aggressor with price. And yesterday they were lifting with Delta. So we did have the ability to carry forward. But today is likely to be a very, quite a resting day. I'm expecting a resting day today with some surprises on the earnings front once that takes place. So let me clear this. So if you look at what's going on here, we have this elongated profile for Friday. We sold off on Friday, and then we had, we opened right here. We tested down, and we ended up rotating up and leaving this nice little belly behind and closing right at the close. And to me, this is really stating that even though we very structurally repaired what we did Friday, we still have this really strong acceptance point down here in the 42.30 area. So a drift down, as you'll see that we are drifting below last week's low, which was last week's low was 42.6225. We're trading, the overnight low is 42.64. It's a weak low in the overnight session, so we are pushing towards last week's low at 62, something like that, 62. And then we are likely to trickle down into the 46 again, 46.50. That's the expected move overnight. Once it gets into the 46.50, it sets us up with a really decent trade potentially, because as it moves out of last week's range, you get some people puking them out, which is likely to drive us into the 50-46 area. But then we have this value area from yesterday, which is completely balanced. I expect support here. I expect to bounce from the value high of yesterday, which in TPO terms is at 42.50. So I'm expecting a bounce off of this 42.50. This sets up a long trade to about 62.64. Okay, so that's a nice little trade setup. If it pushes back down and we don't get a bounce off the open, if we don't bounce and push to the prior settle right away and we end up selling off and it tries to bounce off the 50 and then we impulse through, then let me have you guess. For those of you who've been listening a long time, I'd like you to tell me what the setup is if we push through, especially with an impulse through that 42.50 value area high, which is 54 for the volume value area high. But what is the trade here if we push through in a balanced environment, in a balanced profile? And this is a balanced profile. What is the trade that sets up? How do we get into this trade? Because we're not here to talk about theory. You can watch many other YouTube videos about theory and teaching. We're talking about what trade setups, what's our plan for today. Okay, so if we take a short off of this 50, taking a short here at 50, okay, what are we targeting? What is the rule here? VPOC test. Yes, TPOC, right, the TPO point of control, or it's not really TPOC because that's a time-based one. But a TPO-based, then we would target 30. We would go back, we would look for the point of control. We would look for the point of control for a bounce. So it gives us, by the time we get into this trade, it could give us anywhere between 20 and 15 points on what is about 3.5 to 4 points of risk. Selling that 50, once we break through the 50 on a pullback, we have about 3 to 4 points of risk. Target 30. So it gets to 30. So let's say, I recommend trading micros. If you're trading micros, trade a 3 lot. 1 lot is taken off at risk. So if you have 3.5 points of risk, take one off at 3 points. Leaves you with 2/3 of the risk. improves your theoretical average. What do you do with the second one? The second one comes off at 30, 50, 31. You don't want to wait till 30. You don't want to wait to the actual point of control. And then you have a runner. So you got filled on the 30. So you picked up your risk, 3.5 points. Then you picked up the target, the primary target, which is 30. So now you've picked up 23.5 points, and you have a one lot left. So your theoretical average is 73.5. 73.5 on that one lot, right? Do the math. Think in terms of money management, very important, risk management. Once you have that 73.5 theoretical average on the one remaining, what are you targeting next? What's the next target? Come on. I want to hear more than crickets. I want you to participate. I want you to learn and answer and make mistakes. Make as many mistakes as you can early on. Then you target the value area low, 4207. 4207 is the trade setup if we break through 50, not just like a little grind, but a push, pullback, hold, and it starts to grind down from 50 or thereabouts. We see that buyers are not able to bring it back above. We aim for 30 and 07, and you take your runner to 07 from 50 for 43 points, right? So now the trade has made 3.5 points, approximately 20 points, okay? And if you get your 07, chances are I'll take them off at 42 points at 08, right? Do the math, 62 points, 65.5 points, 65.5 points. And what was my risk? So this is my target. What was my risk? What was my risk? Quickly, we need to go here. What was my risk on this trade? I already gave you the stop. 3.5 points. 3.5 points times 3, because my risk is the same as my first exit, right? So I risked 10.5 points for 6.5 points. Do the math. What's my R factor? What's my R factor here? Approximately 6R. Do we take a 6R trade every time it shows up without question? Do we take a 6R trade every single time without question? Do we? Hell yes. All day, every day. Even if it has a 28% win rate, if I can get a 6R trade, I'm in. I'm in like sin. That's it for today, guys. No point giving you, that's basically my primary scenario I just outlined. Secondary scenario is an attempt lower because we do have a weak low. We just pushed the weak low back to last week's low. Remember, last week's low is 42.6225, and we just pushed 42.6225. If we bounce up from here, then you're looking at the prior settled stat. So we have the P settled stat. So P settle is at 42.9275 from yesterday. Okay, so you're looking for P settle as a target, and then you start to work through your levels on this profile from Friday, the sell-off profile from Friday. Hopefully you pick something up today. I want to remind you that tomorrow I'm going to be on Futures Radio Show with Anthony Cordelli plus Pax Trader 777, Matt Kina, plus Earl Counter. Earl's a super interesting guy, former pit trader. And they're going to be talking about the transition, learning in the pit and the transition to the screen. Go register to attend at edgeClear.com/deli. You can enter your name for a drawing of 5 Logitech 4K ultra high definition cameras. We will select those winners on the go. We'll select 5 winners, 5 runners up, and we'll be talking about what it was like to trade in the pit and how it was like to transition to the screen and the obstacles and how they were overcome. That's tomorrow at 12 Eastern. Your entries due by 11 Eastern, Again, edgeclear.com/daily, sponsored by EdgeClear. I'm the owner and founder of EdgeClear, so I'd appreciate your support if you're looking for futures brokerage, but we're going to be a part of the show tomorrow. Love this show. It's a lot of fun. Make sure you attend during the midday doldrums. Take care, and I'll catch you tomorrow. Take care.